My name is Muhammad Shukri. For random word theory, which state that all movement in the stock market is unpredictable. This I take from the technical analysis and chart interpretation by John Will and Son. The theory believes that price reflect all information already, like news, earning, and each other. So, new price change happen only when new info appear. But new info is random and cannot be guessed. So, price movement is also random. In short, past price cannot help you predict future price. Imagine a man walking with his eyes closed. Each time he takes a step, he randomly chooses a direction. Sometimes he left, sometimes to the right, forward or backward, with no specific pattern. We watching from a distance cannot predict where he will go next. His current step has nothing to do with his step before. Random walk theory is important. This theory wants traders to be careful of overconfidence and to understand that markets are unpredictable. From the chart, we can see my bank from 2020 to 2021, which is 1 year. March 2020, sharp decline. Price dropped from 6 ringgit 30 cent to 4 ringgit 80 cent, like due to the major event like COVID outbreak and lockdown. Randall Ward theory said this drop is nothing something you could have predicted using chart. This happened because of the sudden new information. April to July 2020 recovery and sideways movement. Price went up and moved sideways with no clear pattern. This support Randall Ward theory idea that price movement have no consistent trend. November 2020 strong rally. Price surged from 5 ringgit 10 cent to 6 ringgit 50 cent. Possibility due to positive news and economic opening. Again, this was driven by the unexpected new event, not predicted pattern. December 2020 to February 2021, unstable movement. This price fluctuation up and down with no clear direction. This follow the random walking theory. Stock price do not follow a fixed pattern and change based on the new information.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Fahman Nusudin. So today I will explain about efficient market hypothesis EMH. So what the theory means? It's impossible to consistently outperform the market by using any information that already publicly available because the market price adjusts instantly to news, data and reports. So how EMH views price behavior? According to EMH, price move randomly, not in predictable patterns. New information like economic news, company report or global event is quickly and fully absorbed by the market. So, a real-life analogy or example that I can give is Maybank during COVID-19. When COVID-19 first hit globally around early 2020, news spread rapidly about lockdowns, reduced economic activity, and financial uncertainty. So, why it matters to traders? So, first, technical traders. EMH says chart patterns won't give a consistent edge because price reflect all info. Second, fundamental analysis. EMH says deep company research won't help much if everyone else already know the same info. Third, day traders. Quick trades on news may be too late. Price react instantly. So less passive investor. EMH support index investing because beating the market is very hard. So next we look at Maybank chart during COVID-19 from 2020 to 2021. So for the early 2020, when COVID-19 started spreading around the world, Maybank stock dropped fast. Investors read to bad news because of lockdowns, economic slowdown, lower loan activity, and risks of unpaid debts. This shows EMH in action. The market responded fast because the news was already public. So we look another one for strong recovery from November 2020 to January 2021. Maybank price went up again when COVID vaccines were announced, economic started to reopen and last investor confidence returned. The price went up quickly after good news showing that the market was absorbing the new info fast, exactly what EMH predict. That's all for me. Thank you.
Assalamualaikum. My name is Muhammad Adik bin Muhammad Abdasi, and I'm going to talk about contrarian theory. Contrarian theory means is going against prevailing market trend by selling when others are buying and buying when most investors are selling. Contrarians view the price behavior differently than other investors, where they buy when others are fearful and sell when others are greedy, which is the opposite of what majority of investors are doing. As for example of it, where Michael Burry is a widely known as a contrarian investor, where he famously correctly predicting the 2008 housing market crash. And why is this theory matter to traders? Is because being a contrarian can be a rewarding, but it is often a risky strategy that may take a long period of time to pay off, and the contrarian investment idea may continue to underperform for extended period. Now I'm going to talk about the chart trend. For the January to March, from the beginning of the 2020, the price had already shown a downtrend from RM 8 ringgit 80 cent to 7 ringgit 7 cent in March, where it showed how people start to panic and sold the stock due to COVID-19. As for March to June, at the middle of the March, the price shows an uptrend as it slowly rising from RM 7 ringgit 7 cent and suddenly rise to 8 ringgit 20 cent in June. As for June till November, the price start to return to downtrend where people continue to fear that the stock might start dropping, so they slowly sell their stock. In this duration, which is perfect time for contrarian to buy the stock. As for November till December, where at the beginning of November, the price suddenly shows an uptrend where people start to buy the stock and the market is entering its bullish stage as it increased from RM 6 ringgit and 96 cents to 8 ringgit and 91 cents at the end of the year, which is where contrarian will sell the stock.